Good afternoon, ladies and gentlemen. How are you? Welcome back to my live talk show. By the way, now we are on the 21st of December, nearly end of the year 2023. I think from tomorrow, if you think about the interbanks data, most of them will start to take the holiday for the Christmas seasons. So the market liquidity is very thin now. So you will not see the such a big movement, sideways transaction. Okay, so within this year, we have still one more week. So I want you to be very careful. Sometimes you see, because of the liquidity is very thin, you see, market will jump down or down like this. So as much as possible, I would like you to minimize your position, even to gold and some other key currencies pair. Okay. By the way, so shall we predict the next year, 2024, particularly gold? Okay, I know most of you are trading gold, so I would like to give you some ideas how gold will be traded next year. And in order to predict the gold price movement, the most important thing is the interest rate between Japan and United States. If the United States interest rate is higher, gold price will going down because gold is an alternative asset class against the US dollar. So if the interest rate of the United States are higher, people will appreciate the US dollar and they will start to sell gold price. So it is key things to observe United States interest rate. And as you probably know, FRB already decided this year we have no more interest hike. They will not increase the hike. But maybe from next March, they will start to reduce the interest rate. They will not do any more, we call it the interest rate hike. So every FOMC meeting, they might cut the interest rate 25 basis point, maybe 3 times in the next year of year 2024. By the way, 19th of December, Japan, we had the BOJ, Bank of Japan's monetary policy meeting. And surprisingly, Japanese government will maintain quantitative easing. So they will not change the interest rate, and then they would like to maintain the yield curve as well. By the way, okay, so let's have a look at this PowerPoint. Okay, I said correlation between 10-year bond yield difference between Japan and US and the dollar yen. Okay, as I told you, it's quite important for you to observe the dollar yen movement against the your gold. Okay, this vertical line is showing the price of the Japanese yen against the US dollar. Okay, and then this horizontal line showing the difference between two countries' yield for 10 years bond. Okay, many people think that the interest rate is the same as the yield, but actually, if I speak in detailly, precisely, it's quite different. Okay, but many people treat this yield of the 10-year bond between Japan and the US interest rate. In a sense, it's correct, but if I speak precisely, it's actually different way of calculation. Okay, but this is the base of the interest rate for both countries. Okay, usually, look at this. US, their yield, okay, of the 10-year bond is around 4.5%. Okay, and Japan, 1%. No, sorry, 0.8%. Okay, so the difference here is 3.7%, right? So look at this chart. 3.7% is here. If the difference is 3.7%, we can logically calculate the ideal price of the dollar yen. That will be the 145. Okay, according to this coefficient. Maybe you don't understand the meaning of coefficient, but treat this coefficient something like a formula. The number, okay? According to this numbers coefficient, we can calculate the ideal price of the dollar yen rate, okay? So, and then also you can see so many dots here, right? Yeah, so many dots. And then these dots are showing the difference between Japan 10 years bond yield and then US 10 years bond yield. And then we have to think about the difference. If the difference is bigger, US dollar become very strong. Okay, look at this, 3.7%. If the difference is more than 3%, dollar will be higher. Okay, 155 yen. Okay, but if the difference is narrow, getting narrower, okay, dollar will be depreciated. And then price will going down. So this is a really good, how do you call, the sample, how you observe the gold price. If the dollar depreciated like this, going down, gold price will going up. Okay, so I would like to explain to you more in detailly. Okay. Usually, I said US 10 years bond yield. In other words, you can call it the interest rate, but actually different. But you can call it the interest rate. Okay, 10-year bond yield is 4.5%. Japan always 0.8%. So difference is 3.7%. So look at this dot chart. Okay, 3.7%. Equals to 145 yen. Okay, because of the gap between the yield of Japan and the US is quite wide. Okay, but 19th of December, BOJ, Bank of Japan, announced the monetary policy, and they will not change the yield, and also they will not change the interest rate. So this news happened in the market. And give the big impact. So yen's, how to say, yield going down from 0.8% to 0.557. And together with the US dollar, US 10-year bond. 10-year bond also going down to 3.859. So difference is a 3.30, right? So 3.7 from 3.7% difference to 3.3%. So according to this correlation is something like a relationship, okay, between the yield and then the US dollar price. Look at this. Is just below the 140. But actually now we are trading at the level of 143. But this correlation is quite high. According to this coefficient, you see, correlation is 0.8634. It's quite high correlated. If the correlation, according to this coefficient, if the figure R2 is 1, it's 100% correlated. Okay, but the rate of the correlation is 0.8634. So this is high correlated. So if the interest rate yield gap is higher, wider, dollar will going up. If the yield, the gap between two countries narrower, dollar will going down. Okay. Of course, this correlation rate 0.8634 will be timely changed, and of course these the yield of the bond also timely changed. So what you have to do is just to get this plot chart from the trading view, and I want you to apply the 10 years bond yield to the US dollar and then Japanese yen and find out the dot, okay? So after BOJ monetary policy announcement, yen yield, the 10-year bond yield dropped to 0.557 from 0.8. And then the US, usually the 10-year bond is around 4.5%, but dropped to the 3.856, okay? So from 3.7 to 3.30, price going down 145 to below 140, okay? But now the dollar is now trading at the late range of the 143. But ideal price, according to this, how to say, coefficient, correlation between Japan and US 10 years bond yield, it should be around 140, below 140, okay? So this is a really good indicator besides technical analysis and fundamental analysis. If you have a time, I want to check the website of the Trading View and find out this plot the chart, and then simply apply 10-year bonds yield of the US and 10-year bonds yield of Japan, and then you can, how to say, find out the dot. So you can find out the ideal price, average the trading price, okay? By the way, for me to say next year, okay, Japan will increase the interest rate yield, particularly after spring wedges struggle. Sometimes we call it spring wedges talks. It means employer and employee would like to have a hard discussion to raise up the basic salary. We call it the base salary, okay? So BOJ will consider this number, and if average wage going up, they might do the interest rate hike. That will be the end of March to end early April. And also, together with this the news, US, as far as you watch the Fed watch, US may started to decrease the interest rate from March. So these two fundamental news will give the very big impact toward the US dollar. I think US dollar will sharply going down if this happened. These two news happen at the same time. US dollar will going down. Okay. For example, usually US dollar 10-year bond is traded at 4.5%, right? If this happen, maybe US dollar bond yield will below 4.2, and then Japan. Even they increase the yield, they cannot increase maybe 25 basis point or 50 basis point, because Japan is very conservative and they don't want to show such a big changes on the monetary policy. So I presume 1%. So difference between 4.2, maybe less than 4.2 to 1%, it's going to be 3.2. Look at this, 3.2 is about 135. So 10 yen difference from now to next March. I presume dollar will going down to 130 to 125, this range. It means dollar will be depreciated, and then, you know, right, gold will be appreciated. So as for me, from next March, January may be difficult. February may be same range, okay? But from March, gold price will going up. And then, as I mentioned to you, if these two things happen at the same time, Japan increased the interest rate, okay? Interest rate, and then the US decreased the interest rate. The gap become narrower and narrower. So maybe more than 3.2%. If it's 3%, okay, 3% below $135, okay, maybe 130. I don't know, maybe 125. That time is a good chance for you to go and buy gold. This is my prediction. And then this situation will be continued next year, year 2024. I believe gold price will going up year 2024. Okay, based on this plot chart of the correlation between 10-year bond yield difference between Japan and US and the yen. Okay. I hope you understand even a little bit. Please remember this plot chart, okay? This plot chart, you can get it from the website of the Trading View. And then I want you to find out the 10 years yield from the various sites. You can easily get this. I get this from Japan side, the website, okay? So apply these and then find out this difference. 3.3 or 3.7 or 3.2 or 2.8, I don't know. And then apply this plot, okay? So you can find out ideal price of the US dollar. If the gap is becoming narrower and narrower, US dollar will be depreciated down, okay? And then if the gap becoming wider and wider, US dollar will become strong, and then gold price will going down, okay? But I do believe next March onward, gold price will go up. I think this is a good news. If you are longer, if you are buying gold, you'll be very happy. I think you can enjoy nice profit from the gold trade from next year, okay? But until then, particularly the period of the season, Christmas season, a lot of bank dealers or traders are not in the trading room or dealing room. They will take a holiday particularly from tomorrow. And then they will come back after Boxing Day. Boxing Day is the 26th, okay? So 27th trading will be resumed, and then they will do a lot of adjustment. And then 31st and the 1st is the final countdown and a new year. So again, not many dealers, traders are trading. So 2nd of January, they would like to resume their active trading, okay? So as I told you, in order to avoid such a risk, because the liquidity is very small, so I want you to minimize your position. And if you dare to trade, think about your margin as a risk control and trade very carefully, okay? Thank you very much for your watching. I hope you understand this little sharing, okay? Thank you for watching. Thank you. Stay tuned with us.